When you're day trading, why does it feel like you're guessing every single time you hit that buy button? You know what a day trading breakout looks like. You know what a day trading pullback looks like. One day the breakout works perfectly. Next day, same pattern, same stock, stopped out. You start wondering if you're missing something. Maybe there's an indicator you don't know about. Maybe you need to watch more YouTube videos for the secret. Here's what nobody tells you. The pattern isn't the problem. You're day trading stocks without something I call MVC, minimum viable criteria. You're seeing setups everywhere because you haven't defined what makes a setup actually worth your money. In the next 10 minutes, I'm going to show you the exact filtering system that separates random day trades from high probability setups and why this one shift will make your results feel predictable instead of random. Let's get into it. Okay, before we jump into the charts and start breaking everything down, there's a really important quote that I want to give you, and it really comes down to this. When you know what you're looking for, you're never lost. And a lot of traders who work really, really hard just simply haven't taken the time to kind of reverse engineer what exactly is a great day trade and how could I rely on that to actually be the one that produces the consistent returns that I'm looking for. So high probability trading in the way that I've been doing it. And my name is Pete Renzulli. I've been day trading for 25 years. I owned one of the larger trading firms in New York City for about 8 years. Is minimum viable criteria. And the framework is very, very simple. And most importantly, it's repeatable. The single biggest thing that I want to get across to you right now, though, is the success that you are looking for in the stock market, and specifically the consistency as a day trader, comes from the consistency with which you follow a strategy. Let's be super clear about that because a strategy has an edge. Part of that edge is following through on your taking losses, allowing your stop loss to get you out of a position, holding your winners, adding to winners, those kinds of things. So I just want to say this again. The consistency that we are all seeking as day traders can be found in the process and the consistency with which we follow the process. So we're going to work our way through the high probability trading setups here. I'm going to give you everything from start to finish. Now, first thing we're going to review is the actual real problem and why we believe we have so many opportunities that we see day trades everywhere. Then we're going to work our way into the high probability framework of minimum viable criteria, work our way down into implementing these day trading setups, the whole system from start to finish. And then we're going to work our way into actually looking at charts, minimum viable criteria in practice. We have a couple of examples in here, but I'm going to actually go straight over to the charts, and I'm going to show you the exact list that I look at every day. And then the shift from guessing to knowing. And there's something really important that I want to get across here. Day trading is hard. It's challenging. It will mess with your head more than anything you've probably ever done before. That's why what we're talking about here, this is for educational purposes, right? It's my job to help you make better decisions, but it's your job to implement what works for you. And there's no doubt about it. Day trading will make you, sometimes feel like you couldn't do anything wrong. And then the next day you couldn't hit water if you fell out of a boat, right? The difference between the two is managing not only your emotions during the one versus the other, but is recognizing price action from one day to the next and understanding when the road is kind of wide open and there's more money available versus when we're kind of in stop and go traffic. You got to pull yourself back and recognize that. And the way to do that is having those minimum viable criteria. So let's actually break it down and we'll get into it. The first thing we're going to talk about is the real problem, why day trades are seen everywhere, right? So number one is pattern recognition without context. If we're looking for patterns, we're going to find them. What matters is actually finding real patterns that have repeatability. Next part, we see patterns everywhere because we have the fear of missing out. We kind of feel like we just need to be involved. And something that's really important as well. And I had this, I guess I would say affliction when I first started day trading, which was I felt like I was at my computer, I was day trading, and I had to do something. I had to be busy because I was technically trading for a living. Day trading and fear of missing out are two of the worst things that you can possibly combine when they're not seen from the right perspective, because I got news for you. We're not getting paid by the hour as a day trader. If you are day trading stocks, your job is to get paid for the day, not get paid by the hour simply because you showed up to work. Our job is to allocate capital to find ideas and allocate that capital where we believe is the highest probability of us getting paid on a weekly and monthly basis. And by the way, I never set daily goals. I know we'd like to reverse engineer. I think if you're like every other day trader who's ever been out there, you say there's basically 20 trading days in the month. If I multiply what I want to make per day times 20, that's what I'm going to earn. Very difficult to do that because there's certain days that are really tough, certain days that are really great. My suggestion, and something that's worked for me for a while, is measure your goal setting by the week, not by the day. It's very, very challenging to do by the day. Quite frankly, you drive yourself crazy if there's a tougher day in the market. All right. So let's work our way through here. We'll get down into the strategy collector trap, something I was very guilty of. I have more books than you could possibly imagine. And working full time makes it worse. And what I mean is you're trying to day trade while you're full time working somewhere else. So pattern recognition, right? Obviously, if we're looking for a pattern, we're going to find it. Every chart has breakouts. Every chart has pullbacks. And typically we react to these patterns and we're not necessarily evaluating the setup, which actually brings me to something else that's incredibly important. In my experience, most people who are day trading stocks, what they'll end up doing is they'll look at the charts and they'll look for entry patterns before they qualify whether or not they should be looking for an entry pattern at all, which is very, very important to understand. You don't look for an entry until you've qualified the trade in the first place. And that's actually exactly what you're going to do here. Okay. So first, we're going to work our way through exactly what that means. And then we're going to show you on the charts. Like, as I promised, I'm going to give you everything from start to finish. All right. So fear of missing out creates urgency, and especially fear of missing out and the pressure to feel like you need to make money every day. One of the things that we do in our community is we're very, very clear that our main goal is to qualify what kind of day are we having. Are we having a day where we place entries and they start working out very quickly? Or are we having the kind of day where we place entries, they break out and pull back right away, where we're just not seeing the institutions stepping up after we're seeing these initial pushes, right? Next part, evaluating and entering trades without having the precognition whether or not there's a trend in place. This is another big mistake that people make as well, which is getting to the point where you're looking for entries on those shorter time frames, but not qualifying whether or not the trade is beautiful on the bigger picture where the dominant order flow is. So I want to just give you an example of what this means. And actually, we can actually use what we're looking at here on the charts in Google. We actually have two really interesting days in Google. And if you're not familiar with what's going on in Google right now, it's actually in a ripping move to the upside, just recently reported earnings. But if we kind of pull back and we're looking at what it did here, in this case, it's on Wednesday versus what it did on Thursday. Yeah, today's Friday. When you have the context of the stock being in a really big, strong, beautiful uptrend on the daily chart, the day trading time frame, then the intraday time frame should kind of be a no-brainer to be looking at only buying opportunities. And if you don't understand short selling, don't worry about it. But it's very common to do on the day trading side of things where you're trading back and forth because we can see so many different opportunities. All right. But then we go over here to Thursday, and you can see that the stock actually reported and pulled back really, really strong for the rest of the day. So there's two reference points that I want to show you on the charts right now. The first one is the opening price, and the second one is VWAP. And again, I just can't express this strongly enough. The simpler you make your reference points, the simpler you make your ability to read price action from a specific number. And when I mean from a specific number, this is basically called tape reading with order flow. Tape reading is nothing more than measuring whether or not price action is moving closer to or further away from a significant reference point. Now, you might be like, that's a mouthful, right? Well, you know how to do it already. As soon as you buy a stock, you have a reference point, and the stock is either moving closer to or further away from that, and nobody on Wall Street knows that stock better than you at that particular moment. Well, we use the opening price each day to determine, is the price action from today's open, 9:30 opens, and we're either trading above or below that price, is price action above that as our minimum reference point? That's just one reference point. As we move throughout the day, there's something called VWAP, which you can actually see here on the chart, which is this dotted line. Now, VWAP is volume weighted average price, and it's basically where all the money is trading. And we're looking at volume and the average of where that volume traded. So when we have the opening price and we have VWAP, we have two reference points now to combine with what we see on the daily chart. Now, remember, we talked about fear of missing out before and not having a roadmap. When you put just those simple pieces together that we just covered, the higher time frame trend, the change from the open price for the day, and where price is relative to VWAP, we now have reference points that, unless those three pieces are already in place, there's absolutely no reason to look for an entry. Now, sure, you could find a 5-minute bull flag or 5-minute bear flag, depending if it's a bullish or a bearish day in the market. But those setups are not as valuable without the context of where the dominant order flow is. So when you have those pieces together, that's where you start to put together the predictability and, dare I say, where you would expect to make money if and when those pieces are there, right? So let's work our way back into the rest of what we're talking about here with the charts. All right, so random trades chip away at our confidence. And the only reason you end up taking random trades is because you don't have this minimum viable criteria in the first place. All right. So in order to avoid seeing trades everywhere, you have to be looking for something, not looking for everything. That's the point right there. All right. So minimum viable concept defined, 3 non-negotiable filters, why filters change everything, and the power pyramid enhancing those minimum viable criteria. All right. So minimum viable criteria, this is the first thing that we want to do, is absolutely minimum requirements for entry. All right. Reduces 500 possible trades down to 5 actual trades. Now, basically what we're saying here is that if you don't see this criteria, there's no reason for a position. Now, the thing that we're looking for here is we want to start to say to ourselves, does this meet my strict qualifications? Now, I could already hear, like, because I had all these same things going through my head when I was doing this. You might be thinking to yourself right now that you're limiting your opportunities by having very specific criteria. But what you're actually doing is the opposite, is you are only taking criteria, you're only taking trades that match criteria that give you an edge. So I just want to be super clear about that. Getting more specific on how you define a great idea increases the likelihood of you making money over time, assuming that you are taking your losses and learning how to hold and add to your winners. Okay, so I just want to be clear about it, because that was one of the biggest problems I had early in my career. I was like, if I keep narrowing down what I'm looking at, I'm going to have less opportunities. I'm going to miss opportunities. But in reality, the opposite actually ends up happening. Okay. All right. So the shift going from, is this a setup versus does this qualify? All right. Now, freedom, most of the time, the answer is no. And that's actually important. But the problem here is that because we feel like we're full-time day traders, we actually need to be day trading. We need to be doing something. But what actually happens is you actually free yourself up from feeling like you need to be busy all the time simply because you're at your computer. And it's such a subtle psychological thing that I think all of us have gone through. All right. So 3 non-negotiable filters: the direction of the daily chart. We're going to define that even a little bit more in a second. The current hourly chart, and confirmation on the 5-minute chart. So let's actually break all these down, and then we'll take a look at them on the chart. So what we're looking at on the daily chart is I am looking for above or below the 10-period simple moving average on the daily chart. For me as a short-term trader, I want to be clear, I have different criteria for swing trades, different criteria for position trades. I am looking at the daily 10-period simple moving average, and it's allowing me to determine the bias over that very short period of time, which is essentially 10 trading days. So I'm looking at very short-term order flow and short-term momentum. Now, when I get to this point, I'm immediately, before I'm even looking at my charts intraday, I'm eliminating 50% of the ideas that just don't meet that minimum criteria. So think about this. I'm not even looking for an entry on the 5-minute chart because it doesn't even meet the foundational criteria. Is it up over the last 2 weeks? Okay. Then we move on over into the hourly chart, excuse me, which is basically the 60-minute candle. Is this hour a green or red candle? Now think about what I said before. When you know what you're looking for, you're never lost. So we're essentially saying, if we have a momentum and trend indicated on the daily chart with the 10-period moving average, we are basically going into every single hour of every single day and basically saying, is this candle matching the first indicator? Yes or no? That's really what it comes down to. So we're basically checking the current order flow versus the dominant order flow over the last 2 weeks. And then finally, this eliminates another 60% of the remaining setup. So you see how we're kind of niching down to only look at the main criteria? Then and only then, if we get validation from the two higher timeframes that we're looking at that qualify a potential trade, only then, because it meets the specific criteria, only then do we go down and start to look for entries on what I trade on, which is the 5 minute chart. Now, what ends up happening is we remove the emotional kind of close enough entries because we have that strict criteria: daily, hourly, 5 minute chart. Now, basically, what this comes down to is it results in anywhere from 2 to 3 qualified trades per day. Now, really, what it comes down to is it's really 2 to 3 trades per stock that meet my list. And I'm going to actually give you the list that I look at in the morning as well. It's interesting. There's a very big difference between day trading stocks and swing trading stocks, because the day trading side of things, what we are looking for is I'm looking for liquidity and I'm looking for volatility. Now, a lot of people look at percentage moves per stock, and that's important. And you could kind of take away the volatility based on whether it's a $10 stock or a $200 stock based on percentage move. But all the professional day traders, including myself, we're looking for dollar moves, not necessarily percentage moves, because we can't trade. You're not going to get paid on a 5% move in a $10 stock. You want to get paid on a $5 move in a stock that actually takes off. All right. So that's the main filtering criteria to start out, and talking about why filters change everything and why this makes all the difference in the world for you, right? Clarity. Who doesn't want clarity when you're day trading stocks? You want to wake up every day expecting to make money if what you're looking for actually unfolds. So waiting for criteria is much, much more simple, and staying back because you're basically saying it doesn't meet my criteria. And when I make trades that don't meet my criteria, I regret it. So it needs to fit into that filter. So you have clarity, confidence, and discipline. Very, very important for our mental for our mental strength. Never mind for our P&L. All right. Now, one last thing we want to do here also is we talked about that minimum criteria. From a day trading perspective on the stock, we can actually amplify how we're looking at the ideas by doing the same exact thing on the markets. So when we talk about the markets, I'm talking about the NASDAQ, the S&P, the Dow, and then we also break it down by sector, break it down by industry group. I know that sounds like a lot, but I just want to say it's really just a question of setting up your charts. Once your charts are set up and you have the same hourly charts and the same daily charts set up, you're basically now saying, okay, show me the stocks that meet that criteria. So you're looking at the stocks that meet the criteria, and then you kind of take a look over here on the left. Like I have my monitor, my big screens over here on the left, saying, okay, the stock looks great over there. Is the market doing the same thing right now, which will amplify our conviction in the idea? So we're looking at the hourly charts of the 3 major indices, and we're looking at the hourly charts of the major sectors. When those are aligned, we start to now increase our conviction because all of the order flow is on the same page. And what does that mean? Well, we're above the opening price for the day. We're above the opening price for the hour. We're above VWAP, and we meet that minimum criteria on the daily chart. When that happens, those are the trades that pay the bills. Those are the trades that pay for all those annoying small losses that we have to take for the ideas that don't work out. All right. So let's continue, and we're going to work our way through implementation. Right. So working our way through implementation, there's a daily pre-market routine, which is kind of what I just talked about before. And then from that routine, we have the intraday execution process. We have setting up your software, which kind of automates this whole process, and tracking qualification rate for those ideas. All right. So let's first get into the pre-market routine and exactly what we'll be looking at to do. Generally speaking, I recommend having a smaller watch list of between 5 and 10 stocks. And actually, what I could give you right now, if you take a look over here, this is actually the list that I trade pretty much day in and day out. If you want to take a screenshot of those ideas, you can see that what I'm looking at is I'm trading all market leaders. I want to trade the stocks that are leading the market because that's where the liquidity is. That's where the institutional attention is. And that's where the volatility is. Now, you'll find, unfortunately, I think a lot of people will tell you can't make money in those stocks that are mega caps and all those kinds of things. I got news for you. You can. Let me ask you just a simple question. There are people that are trading the S&P all day, every day. It's the only thing they trade. They trade the futures markets. Why can't somebody trade a group of 15, 17 different liquid stocks that can move anywhere from $3 to 15, $20 in one day. Of course you can. Make it simpler and learn the ideas in the stocks that you trade every day. So there's my list. All right. So let's kind of work our way back into here. Small watch list, pick what's good for you. What I suggest is picking market leaders in different industry groups. So at any one point, if you go back to what I just said before about following the market moves and you're amplifying the idea that you see in the stock, right? So again, we have the process. Is it above the daily 10-period moving average? Pre-market routine. Mark only the qualified stocks that meet that criteria. Typically, if I have a list of 17, 3 to 7, unless the market's in a ripping move to the upside, kind of like we're in right now, and then we wait for the market open. Okay, now when we get up to software, there's a really important point that I want to get across. All right, intraday execution. First hour qualified checked stocks for an hourly color. Is the hourly color green in the same context of the daily chart? Here's the important part here. Every single hour, you're resetting the trend. You can have an amazing move to the upside on the first hour from 9:30 to 10:30. And then 10:30, that stock is trading below the hourly price for that entire hour. So what would you do? Well, it doesn't qualify anymore, even though it did an hour ago. That's very important. You can't force trades. One of the biggest frustrating things I had early in my career, I was like, I don't understand. This stock is up on the daily chart, but I keep buying it and it keeps going down. It meets the criteria. Well, it didn't meet the criteria that hour. So I want you to write that down. You're resetting the clock. You're resetting the order flow at the start of every hour. And I look 9:30 to 10:30, 10:30 to 11:30. Everybody always asks that question. It's always on the bottom because the market starts at 9:30 and then we go to 10 to the next hour, 9:30, 10:30. That's a really important point. I want you to write that down. It could qualify from one hour to the next. It can change. That's very important. But when you have your software set up, your software is telling you every hour when this happens. All right. So success is when nothing qualifies and you wait. The other side of success is when everything qualifies and you don't hesitate and you go and get it because what you were looking for is there. Okay. Something else that I was taught early in my career, which is basically if it's hard to find, it's not there. Just keep that in mind. All right. Now, software setup and automation. Use scanning software to auto filter and scan for above the 10-period moving average and the current hour green or red setup. Now, that sounds complicated, right? It's not. A lot of people that we trade with, whether using TradeStation, Thinkorswim, TradingView, I'm going to give you a quick visualization of how I do it actually in TradingView. It's probably one of the most popular softwares out there. We actually love it. I can't stress this enough. The more time you put into setting up your software to do the scanning for you, the easier you're going to find day trading to be. Now, there's still a lot of mental aspect of it and all those kinds of things, but you don't need to manually do this all day. Like, oh my gosh, how am I supposed to find every one of those ideas? Well, when you set the software up properly, these ideas just float to the top of the list because they actually meet the criteria in the first place. So if I show you what that looks like on the charts, basically what you're going to see over here within this list of stocks, I actually have something called MVC, which is what we're talking about right now. And the stocks that are in this particular list, you can actually see here, this is changed from the open. So essentially change from the open is telling us which stocks floated to the high during that last hour of the day. So when you kind of add into the equation, you can literally set the software up to have the minimum viable criteria tell you which stocks meet the criteria. And then every hour it's rotating based on which stocks are the strongest for that particular hour. That's kind of fun, right? It makes it a lot easier. All right. So let's get back into the presentation. I want to make sure that we break this down in a lot of detail. So that's the software setup. And then tracking qualification rate. Measure the minimum viable criteria versus the trades that you've taken. Were you honest about whether or not you only took trades that met the criteria? Losses cluster in didn't qualify trades. We'll get to that in just a second. And minimum viable trades yield higher win rates and bigger wins. And the reason that they have higher win rates and bigger wins is because you pre-qualified them in the first place. Now, one thing I want to say, and this is based on years and years of experience, I can virtually guarantee you that when you follow a plan that works, that has an edge all the time, not some of the time, all the time, trading becomes a lot less stressful because now you are allowing the edge to do the heavy lifting. So when you kind of go back and do a review of your ideas, you will find that the trades that you actually allowed your edge to do the hard work, meaning you had the minimum viable criteria in place in the first place, it becomes much easier to expect to see success because you are actually trading with the dominant order flow from the day to from the last 10 days to today to the hour. Only then do you start to look for entry opportunities. Now, of course, any good edge has ideas that will work and the same exact trade doesn't work, right? But that's a part of any edge. Remember, any edge is defined by most of the time it happens, sometimes it doesn't. And what happens is inexperienced traders who are frustrated only focus on it's supposed to work. No, it's supposed to work most of the time. When you put that into your head and you think about lining up your ideas with the minimum viable criteria, you are now putting on trades that should work most of the time, that you should definitely cut your losses when they're not working, and definitely learn how to add and hold those winners when it is. This is the process from start to finish. So if you're day trading stocks and you're finding yourself inconsistent, this is where the secret is. And I hate to use that word secret because there's a million different ways to trade, whether you use my strategy, the one that I just showed you, or if you have your own. The secret to putting yourself in position to be a consistently successful day trader is first taking the time to have an edge and then learning how to implement that edge all the time. And if you do, I promise you're going to find day trading to be a much, much different experience and one that you will fall in love with over and over again. I'll see you soon.